Welcome back, everybody. Merrill Chandler here, your host of the Get Fundable universe. And today on our breaking news, so you don't break the bank, we've got a lot of things are going on. Some big banks are making big moves, and so let's get to it. First of all, JP Morgan Chase is under fire right now because of of robo signing. They are unleashing literally tens of thousands of lawsuits to credit card owners that they originally gave payment moratoriums, and after Chase gave a notice saying, hey, it's time to start making payments, then if it went further 30, 60, or 90 days, they're starting to sue. So they're taking them to court. The problem is, and I'm going to read a couple of lines out of this. Robo signing is where, for the entire company and tens of thousands of clients, they have a hey Paul, glad you're here. They have a one office in Texas, and they are literally rubber stamping lawsuits. They are affidavits. Now, an affidavit is legally submittable in court as evidence of non-payment. If an employee, now, what's supposed to happen is the employee is supposed to have personal knowledge of the file of non-payment, right? So a credit card bill, and they review it and said, yes, there are all these people. This person has not paid their bill on time. So an affidavit, I have reviewed the account, and we can take them to court. Problem is that there is just these robo-signers. They did this when they were trying to do foreclosures back in 2008, 9, and 10. So the robo signing is literally rubber stamping tens of thousands of submissions for lawsuits, saying that they have personal and accurate knowledge about these things. And there is so I wanted to read this. Chase filed lawsuits and obtained judgments against consumers using deceptive affidavits and other documents that were prepared without following the required procedures, says the Consumer Finance Protection Bureau. And so, of course, Chase declined the interviews, but Chase is back at it. They did it for mortgages. Now they're doing it for credit cards. They're literally just filing lawsuits without having gone through the legal and lawful due process that people are supposed to go through. So be on the lookout there. If you did any moratoriums on Chase credit card payments, on Chase auto loans, Chase mortgages, be careful. Be on the lookout. This is what's going on there is no bueno. All right, so then let's go to Bank of America. Here's a new Bank of America is hitting the news big today. We talked about it in, I don't know, October or November, that this was on the horizon. Well, Bank of America is leading the charge. Tier 1 bank is slashing fees if you go into non-sufficient funds for overdrawn accounts. Now, this has nothing to do if you have a check guarantee card, because the check guarantee or overdraft protection account is designed to make sure that you don't get these fees. But if you've been to the boot camp, if you've been watched the podcast where we talk about this, using your overdraft protection is a whole nother minefield. But Bank of America, what they've been $30. If the balance drops below zero, they're lowering the fees from $35 to $10. Now, this is their attempt to continue to engender and build better relations with their customers. And just so you know, we've been talking forever that since the pandemic began, a number of different banks are creating better and better relationships. Well, so now we juxtapose Bank of America lowering fees and Chase now going in and robo-suing thousands and thousands of borrowers that they did give authorization for moratoriums, but the folks weren't able to pay after the moratorium was completed, and now we're back to we're back to it. So we're excited to see all of these movements, especially the lowering of fees. And thank you. Kevin said that they have a big lawsuit against them for fees. So there are a lot of big moves are happening. Let's continue then to our next section, because we still got them coming. Wall Street Journal. Here, just a side note: Wall Street Journal is reporting that Citi is pulling out of the consumer markets in Mexico and focusing on wealthy clients and do more like high-level banking and private client banking. So Citi is moving out of Mexico completely in their consumer lending products division. All right, where I wanted to end today is the credit reporting companies, the credit bureaus, are under fire again. I'm going to quote Rohit Chopra, who is the director of the CFPB, the Consumer Finance Protection Bureau. He's quoting America's credit reporting oligarchy. Now, I've never oligopoly is what the term they uses. So very few are monopolizing the entire credit reporting industry. Has little incentive to treat consumers fairly when their credit reports have errors, says the director. Today's report is further evidence of the serious harm stemming from their faulty financial surveillance business model. So there's over 200 million Americans have credit files whose contents have errors significant enough to raise the interest rate or get them denied. Now, this has been a problem since 1992 when I entered the marketplace with Lexington Law Firm, and interestingly enough, other than getting free annual credit reports and them showing up giving us weekly free credit reports, the credit bureaus process, the dispute model, the responding to claims and verifying data is as poor as it ever has been. It has not improved in the 30 years that I have been in this business. And so they're under fire. We're going to see what actually happens. So keep posted, because I don't know what's going to change. I was having a conversation with one of our tribesmen, Michael, and said, "Hey, can we use this as part of our disputing process?" And the problem is that we already CC the CFPB on some of the later disputes, the dispute number 4, quarter 4 disputes for our clients. And there are so many. I mean, there are tens of thousands of disputes, and depending on who you talk to, per week or per month going into the bureaus. That is overwhelming if the CFPB is being if it is being included in those as a CC. And so what they're doing is they're taking the complaints and they've built a report out of it. I would like to see them actually create a massive fines. Massive fines that actually cost them the credit bureau's profits. That's the only way. When it's too painful not to do it, that's the only time any human being or corporation changes, is when it's too painful to do it the way they're doing it now. Right now, it is not painful enough. So they would rather pay $10 million in fines than change the system that's creating multiple billions a year in profits. So let's go to so that wraps us up today. For those of you, please, if you've watched this and you know somebody, B of A, update them, like, love, share this episode. Let's get them in front of this information so that they can make decisions or know what's going on at B of A, what's going on at City, what's going on in the CFPB. And for those of us who are members of the tribe, I'll see you on the inside of our Q&A in just a moment. You guys have a spectacular rest of your day.